Welcome back. Many South Africans have a variety of insurance policies and some that they may not need. Who knows? The insurance industry itself is a key pillar of our financial services sector, but many who contribute to it do not know how it works, nor do they have influence over it. There's a new company called Yalu Credit Life that has just been established, and I learn it intends to rock the establishment. But how so? The Chief Operating Officer, Tlalane Ntuli, is here to tell me more. And Tlalane, a pleasure to have you with us.
Thank you very much for having me.
And, you know, the concept Credit Life is not something known to me and a lot of people. But there are people who seemingly take insurance on the credit that they take, right? Is it everybody who does that, or is it some people?
It is some, but there are parts of it that are mandatory. So let me explain what I mean by that. Credit life insurance is in fact one of the biggest forms of insurance. It is bigger than the funeral market, believe it or not.
Yeah.
Remember that funeral insurance is always known to be the biggest type of insurance, but credit life insurance as a sub-industry has 15 million policies just for personal loans. So if you take out a personal loan from one of your credit providers or one of the big banks, one of the things that they'll typically give you is credit life insurance. So as you're excitedly signing your documents for getting the loan, because often when we take loans, we're taking loans because we need the money for something or other.
Yes.
So they will, in the excitement of you signing your credit life, your loan, one of the documents that you'll be signing for is credit life insurance.
Okay.
What credit life insurance
is this one
does,
of those where they say sign here and you don't really know it?
That's
it's the
exactly
sign here type insurance.
It's the sign here type of insurance.
Okay.
So what that actually covers you for is for death. So should you pass away, should you become retrenched, or should you become disabled permanently or temporarily, and it covers you for the loan. So in other words, if you're retrenched or if you are disabled, it'll pay certain installments, up to 12 months for some, up to 15 for others, depending on which credit life insurance policy you've got and with whom. Or for the death, it pays it out fully, or for permanent disability, so it settles your loan. And credit life insurance on loans, so personal loans specifically, is mandatory. So in other words, when you have a personal loan, for most providers, you have credit life insurance. Most people don't know this. The other parts where it is mandatory, or the other forms of loans where it's mandatory, is for affordable, what the market calls affordable home loans. That's usually loans below 800,000, and for student loans. All in all, this is 300 billion rand worth of insurance annually.
300 billion rand.
300 billion rand.
But the way you explain it, it's like a sort of below the line type business, because unlike funeral insurance, funeral cover, or any other forms of insurance where we see the advertising for it, we don't see any marketing of
and
this.
there's a simple reason why that happens, because they don't need to incur the cost of selling credit life insurance. It's sold as part of the loan. Because
it's mandatory, as you say.
It's mandatory.
But because of that, then you don't have choice.
You don't have choice, but that's specifically on personal loans, on bonds below 800,000 rand, and on student loans. On things like credit cards and on revolving loans, it is voluntary, so you have the option. But oftentimes the strategy to sell that to you is to almost sell it to you as soon as you've got your credit card. So if you can imagine, you've just gotten a credit card approved for, I don't know, 50,000 rand. You're excited about that because potentially you're going to go buy yourself a new TV set to watch the rugby, and somebody calls you 2 hours later, or maybe even 24 hours later. The reality or the possibilities that you're probably still quite excited about it. So when somebody says, we've just granted you credit card, and you're probably thinking, oh, this is about my credit card delivery, or when I can go fetch my credit card, somebody at that point sells you credit life insurance, the chances of you saying yes are very, very high. Same thing with vehicle loans. So in fact, with vehicle loans, as you're signing your documentation with the dealer or the finance person at your dealership, they'll ask you the question about credit life insurance, and they'll tell you some sob story about how someone could have passed away, or when you pass away, which is often a reality, right? It's not myth. People do pass away. They do end up having these debt or these credit products that must then be passed on to the family to pay for. So it is actually something that when you have your financial portfolio properly set up, credit life insurance is one of those things that you should get.
But you know, I mean, 300 billion rands is a lot of money that is changing hands in this. But how different then, in your case, would you be from the other existing products. So because if it's mandatory, if it's done in a way where you don't even know who you're signing with, what difference does it make that you've got Yalu Credit Life insurance or whoever? I've got no idea who else is out there, for instance.
So if I can give you a little bit of background. In 2017, the National Credit Regulator released new credit life regulations. It's actually Section 106 of that particular regulation. And what it said was there were three fundamental shifts that came around with that regulatory change. The first one was the existing credit providers who sold credit life insurance not only had to tell the customer that they have credit life insurance, but they also had to swap out or switch or replace a credit life insurance policy that existed for an alternative one, should the customer so please. The term that the regulation uses in that case is must. And that's very important. The second piece was that it actually put a cap on how much credit providers could charge for credit life insurance. So in the past, it was a free-for-all. You might remember the Lewis case of 2016, where they had gone up to about 27 Rand per 1,000 Rand, if I recall, but it varied as to whoever wanted to charge whatever. What the regulator did was they capped how much credit providers could charge for credit life insurance. So it made it a little bit more affordable for customers. The third one, which is also very important, is that they standardized the definition of what is considered a credit life insurance policy. One of the things that the incumbents would do to make it easy to get out of the requirement to switch or replace an existing credit life insurance would be to say, well, actually the definition is not the same. So in actual fact, if you think about it, your credit life insurance policy that you want to swap out with is not the same as ours. So then the regulation said it's standard. If it covers death, disability and retrenchment, it is considered a credit life insurance policy. So then comes Yalu. In 2017, my partner Nkazi Sokulu and I, familiar with the new regulation, providing the opportunity for probably independent credit life insurance providers, saw the opportunity and said this is something that we need to look at. Essentially, there's four things that differentiate the Yalu Credit Life Insurance Plan from what is in the market. The first thing is our installments or our premiums reduced over time. So essentially what happens in the market is most providers, not all, but most, have standard and they have flat rate.
You pay the rate for the life
of the loan.
Yes.
So if you owe 100,000 Rand and your premium is, 300 Rand, that is what you'll pay for the life of the policy, even when you only owe 500 Rand in your balance. What the Yalu Credit Life Insurance Plan does is it tracks how you're paying your loan, and as you reduce the loan amount or the balance of the loan, so too the premiums reduce. That's the first thing. The second thing is we've made it really simple for customers to switch, because one of the reasons why customers don't prefer to switch is it becomes really cumbersome. Each of the providers will ask for something or other, and it's often different things. It is very, very difficult. Bar from your vial of blood, really, there is nothing out of bounds in terms of what they ask for. We've made the switching process really easy by automating it for customers. So the customer doesn't have to run around talking back and forth. They've got all the documents that they need for each provider, and it's sent out as soon as they take up the policy. The third thing, so I've spoken about affordability, I've spoken about simplicity. The third thing is the fact that we have made it such that when a customer finishes their loan, they get 10% of the premium back. So if you think about it, there's nothing more angering than paying your loan, your premium every single month and sticking to that, but never getting anything at the end of the period. And we know that the whole cashback principle is one that's been made quite popular in the short-term insurance space, but nobody did it in credit life insurance. So that's something that we've introduced. The third one that most customers also gravitate to is the consolidation aspect. So if you've got 5 different loans or 3 different credit cards, you have one policy that's covering every single one of those credit products. While as in actual fact, if you have previous policies, then each of those credit lines will have an individual policy.
Well, I mean, it sounds like insurance is a complicated matter. You have insurance here, insurance there, and many people are not aware.
Yes.
Like when you talk about consolidation, this is what comes to my mind. But, you know, in a broader sense, what is the main thing that we need to learn to understand when we buy insurance, whether life, short-term, for vehicles or funeral, or I don't know how many policies people have on average in South Africa.
Yeah. So I think the first and most critical thing is for people to understand the products that they've got. And a lot of the time we entrust brokers, advisors with that. And yes, to some extent it probably is, particularly now with the regulation saying you're paying for the advice, right? But it's still your prerogative to make sure that you understand the policies that you have within your basket of products, because essentially you are the one that's paying the premium. It's not your broker, it's not your advisor. One of the things that people are horrible at in Tim Modise is reading the terms and conditions of their policy. So they never know how to claim, when to claim, who to speak to, and those are things that ultimately make a difference. So for example, with short-term insurance on cars, many people don't actually know that as the overall debt on your vehicle reduces, you can actually, or the value of your car rather reduces, you can actually go to your short-term insurance provider and say, wait, can you reduce this because the value of my car is not the same as what it was initially. So because we are so ill-informed, we don't make the right decisions where insurance is concerned.
And of course, but some of the insurance companies do not reduce the premiums accordingly anyway. Yeah.
It's not in their interest because that's where their profits come. So if you think about credit life insurance on its own, many of the credit providers in the market actually make their profit not out of the interest, suffice to say, which many people think it is, but it's actually out of the credit life insurance. Why? Because people don't claim. They don't know how. They don't know when. They don't know enough about that particular policy to put in the claims when they need to. That's why it's critical for us to take responsibility for our products ourselves.
Now, if there's one or two particular lessons that you think we should take away from this conversation that we're having when we go out to acquire short-term credit, what is it? What questions should we ask?
You need to ask what all the underlying costs are. So the assumption is always that it's the capital repayment. There's actually also other types of costs that go underneath that. The second and probably most expensive one is the credit life insurance. Most people don't know that they're paying that. The third one is a much smaller one, which is the administration fee. But what often happens is when you're taking out the loan or the credit, people will give you, or the sales advisor will give you the total installment amount. They don't break it down for you. But if you start to learn to read your policies as well as your statements at the end of every month, which your bank should be given to you by law, you should actually be aware of everything that you're paying for from a credit perspective and the expense that comes with the credit that you take. So you can make better financial decisions for your overall financial portfolio.
Okay, well, that's it from us and Tlalane. Thank you very much for having been our guest on the program. We appreciate it.
Okay, I appreciate being on the show.
And of course, she's the Chief Operating Officer with Yalu Credit Life Insurance. We learned a lot about this this morning. Thank you. And that's all we have for you. Thank you for joining the Modise Network, and be sure to tune in again next week. And from us, enjoy the rest of your day.